Okay. Well, again, I apologize for having to cancel class yesterday, February 16th. I had to deal with a kind of a family issue or medical emergency. So now all's well that ends well there. So what I'd like to do today is just to go through basically what I would have done in lecture anyway, talk about these problems. So um, as I said, if you have any questions about doing process costing, if you're confused, please stop by and see me. We can talk about it in class, whatever you'd like to do. So let's take a look at 19, 20, 21, and 22, which are really, I think, the essence of doing process costing. And in many cases in cost accounting, I think the first step is learning to do cost accounting. Then step back and say, okay, I know what I'm doing. Now, why am I doing it? And so let's just start with what we're supposed to do with process costing. Then when we're finished looking at how you go about doing it, both with weighted average and with FIFO, we'll stop and then take a look at the conceptual questions and talk a little bit more about why. But before that, let's just talk in terms of some very general statements about process costing. One of the distinguishing characteristics of process costing is that generally it tends to be high volume. That is, you're producing mass number of items. But even more importantly, the thing that primarily distinguishes process costing from job order costing is that in process costing, I cannot tell one unit of output from another. They're indistinguishable. So therefore, I really can't use the individual item I'm producing as a cost object if I can't really distinguish it from something else. If you want to think of an example, think of the chemical industry where you're adding items and suddenly you're just producing mass amounts of a particular chemical. Or the oil refining business where you're pumping crude oil into a refinery and you're producing millions of gallons of gasoline. 1 gallon of gasoline is indistinguishable from another. So basically what you have to do is to move up the chain of the corporation and find some sort of accounting entity, not a particular product that you're producing, but rather an accounting entity, like a department. And you accumulate the cost in that department over a period of time and then divide it by production. So to a great extent, process costing is a sort of averaging of cost in a particular department. Now the complication is how do we deal with inventory and what do we mean in terms of cost? And that's what we're going to look at in terms of both weighted average and in terms of FIFO. Okay, well, number 19 here looks at this straightforward problem. And number one, they give you the inventory that they're dealing with. And again, it's always a good idea to make sure that you can account for all of the inventory. The B plus A equals E plus D formula. So the beginning is 80, what they start 500, so you have 580. They complete, that is, move over to the next department or move to finished goods, 460. Now the 120 units here are what are the things that are in ending inventory. And often they're in some stage of completion. They may be 100% with respect to materials, they may be something less than that. Generally, then, obviously, if they're not complete, they haven't added all the conversion costs to it. So this is where you begin to look at the issue of equivalent units. Likewise, what we say is that the beginning inventory, what was there, the 80 units, they had added to 493,000 of materials, 91,000 conversion. These costs, the 3 million and the 1.3 million, are what were added during this time period. Now, with weighted average, we're going to collapse and include both of these. Under FIFO, we kind of draw a line and say, let's take these and we'll keep this layer separate from the layer that we are adding during the time period. All right, well, the first step in doing this, going back to the B plus A equals C, is to calculate the equivalent units. And so problem number 19 says, let's do this in terms of what would be called weighted average. So I know I have the beginning plus what adds, so I have 580. 460 were completed and transferred out. And let's just assume here they're going to finished goods. So again, weighted average says you really don't care how, when, and where you started things. If it went out, then it was assumed to be worked on completely during this time period. So even though I had 80 units in beginning inventory, those are going to be added to my equivalent units, regardless of the state of completion. And then I really don't care in terms of, okay, how many did I start and add? 461 out, so those are going to be 100%. With respect to the 120 units sitting there, in this case, they say that it's 60% complete with respect to materials and 30% complete with respect to conversion. So the sum of those, the 532 and 496, give me my equivalent units, which is, in a sense, sort of the measure of work. So I said, normally, what you transfer out to finished goods would be considered always complete. There's nothing more that I can add. So whether I start on the last period or this period, they're assumed to be done in this time period. I sort of throw them back into the pot, kind of re-average everything, and those go over complete at 100%. The equivalent unit calculation usually will always involve simply ending inventory. What stage complete are they? Now, this is a kind of an interesting one because, again, materials are not 100%. If you're manufacturing watches, you're not going to add all the materials at the beginning, so you're going to add them as you go through the process. All right, so that would be the solution to the first one. The equivalent units for direct materials, 532, and conversion costs for 496. Now, another basic assumption with respect to process costing, each unit that you produce has an equal amount of materials and conversion cost in it. So that's a big assumption. All right, number 3. Well, number 3 is always a straightforward one. All you're doing here is summing up all your cost. Take the beginning plus what was added, fine. And again, this step is going to be the same regardless of whether I do weighted average or FIFO. Now, weighted average would say, let's bring this cost on down, because number 4 says, let's calculate the equivalent unit cost. In other words, assuming that these equivalent unit costs do not change, and they really shouldn't change that much, then what we know is that we added $6,980 in materials, $2,990 of conversion cost. Now, yes, you could add them, but right now in terms of applying the cost, which is really the essence of this, of weighted average, or excuse me, process costing, is this step right here. And that is to come up with this allocation of cost so I can value what moved over, so I can make my debit and credit entries, and then value my ending inventory. So take the total cost. Again, it doesn't matter when they were incurred, they're there, so they get included, like I did with equivalent units. And then I bring these numbers down and apply them times the equivalent units. I have 460 that were transferred out, so I take 690, 80, 2990. So I have $4,586,200 that I would debit to, let's say, finished goods, credit to work in process. Likewise, when I've done that, then my ending work in process should equal that amount. So I can prove that journal entry that I'm making to move things into finished goods. Likewise, I can prove, if I have to the auditor, the value of my ending work in process inventory. Now remember, with process costing, this is a little bit unique in a sense that my costs are continuously flowing into work in process. So as I acquire materials and as they're requisitioned to place them in production, as I incur labor and as I incur and I apply all of my conversion costs, all these things are being done as the job is being working on. But what I don't know, and I have no way of really doing that until I do this process here, is how much of that do I assume moved over? Now I know internally how many units are moving over, but what I don't know is I don't have a good way of allocating the cost. So process costing is a worksheet. You set it up on an Excel spreadsheet, and I'm going to do this every period, whether it's a week, whether it's a month, to prove the cost that I need to transfer over to finished goods. And so again, this would be an accumulation over an entire year, January, February through December, all of the calculations that I made for process costing. Okay, now number 21 and 22 look at FIFO. And FIFO is not super difficult, but it's a little bit, what FIFO is fundamentally measuring, as opposed to weighted average, is measuring the amount of work done in the time period. And that is, if this were for, let's say, February, what I want to do is my equivalent unit cost, remember, my equivalent unit costs are going to be measured as the amount of work done during this time period. So in essence, what I want to do with FIFO is to take only my cost added during this time period and divide it by only the equivalent units that I calculate, the work that I actually did in this time period. And that will give me my equivalent unit cost. So assuming that we've kind of done step number one, account for the physical units, okay, now I need to make this distinction here. All the 460 units, oops, that were sent over, let's say, to finished goods, okay, oops, make that complete there, okay, I need to make a distinction here, and that is, oops, 80 of them were in beginning inventory. So under FIFO, my assumption is I will finish them. I will add the additional materials. Take 1 minus what they were done before. If they were 90% complete, then I have to add the other 10% of materials. If they were 40% done with conversion, I add the other 60% of conversion. Now, once they're complete, then I start the new ones. So that's what I call my started and completed. So basically, I take the 460, subtract out the beginning inventory, assume that's going to be completed, and that gives me my started and completed. Started and completed will always be at 100%. This is kind of varies according to what was done last period. Again, what I'm measuring here is only the work done during this time period. Ending inventory will always be the same regardless of whether I do weighted average or FIFO, because again, that's measuring the percent complete that each of these items are that are left in ending inventory. Okay, step number 3, as I said, same thing, regardless of the method I use. Now, step number 4 is different. Step number 4 with FIFO says take only the cost added during this time period, namely the 3,220,000, and divide it by the equivalent units. The equivalent units here constitute only the work done during this time period. So I come up with a different equivalent unit cost, and that's fine. I always, FIFO and weighted average will give you different equivalent unit costs. That's really not, step number 4 is not my objective. It's a means to get to my final objective, which is the assignment of cost. Now, step number 5 is where it gets a little bit tricky. And what I have here is basically layers. These 3 layers constitute the amount that's associated with the 460 items that went over to finished goods, okay? And that is, I had some cost, the 493, 360, 9140, that were in beginning inventory. Again, I don't ignore that. Those are relevant costs. I have to include that. But now what I want to do is I want to take those costs and then add to them, well, what did I need to finish it? This constitutes the amount of beginning inventory. What I started with, okay, plus the work that I added to it during this time period. So the 784,400, then in a sense that's ready to move over. And then take the 380 of what I started and completed. Then the 33,800,000 constitute the value of what I finished, started and finished. Okay. So the total amount here, 4,584,400, that would be the debit to finished goods, the credit to work in process. The ending inventory, just take the equivalent unit times the equivalent unit cost. That would give me my value to my ending inventory. So the difference with FIFO is, number 1, go back up here, in calculating the equivalent units. And that is, I'm only going to measure the work done during this time period. What did I add to complete beginning inventory? What did I do in terms of starting completed? And what about ending inventory? The summation of costs is always going to be the same, but I only bring down the costs that were added during this time period. These are going to kind of be brought down here to be added, but not in terms of my equivalent unit cost. Then I have to create these layers of cost. The 2 layers that constitute beginning inventory, what I started with and what I needed to finish them. What I started and completed. Boom, that constitutes the 460, it moves over. The ending 120 units are going to be valued a little differently. All right, before we look at the conceptual questions, we're going to take a look at number 26, which looks at the issue of transferred in cost. As I said the other day, I'm only going to test you in terms of being able to transfer it in cost with weighted average. The difference is that in this particular department, whatever it is, drawing a line here, okay, and that is that I have something that's flowing in from another department that's coming into this department here, and that constitutes a transferred in cost. That could be any number of departments that this unit went through before it got to the department that we're accounting for. It doesn't matter. So you have, again, the 60 units in beginning inventory, the 100 units that were started. Okay, they transferred over, let's say to finished goods, 120, they have 40 left in ending inventory. So I can account for 160 in each of those. But of that, 60 units in beginning inventory were transferred from another department. The idea here is they add materials towards the end of the process, and again, conversion costs are soon to be added evenly. So let's take a look at this in terms of calculating equivalent units, equivalent unit costs, and assigning the cost under weighted average when you have transferred in cost. Okay, under weighted average, again, we're going to keep it straightforward. It doesn't matter when you started something. As long as it's there, it's included, whether it's for work or for cost. And really the only difference is, rather than having 2 columns, now you have 3. And the difference is a little bit, okay, more so with materials. When are they added? Okay. In this case, they say 120 units were transferred out. Well, fine. They're done. I worked on them. Okay, they're assumed to be, the work was 120 units transferred in cost, direct materials, in terms of work and conversion. So both across the board for all 3 elements there, I've done all the work that I need to do on them to finish them. Now, with respect to equivalent units, in this case, since they're coming in, I can't add any more. I can't add anything more. They come in complete from the other departments. So in a sense, these will always be 100% from transferred in. All the work was done in the preceding departments. It's done. Now, notice here, in this particular problem, they say materials are added at the end of production. So there have been no, it's 0 in terms of percentage. But in this case, conversion is 75% complete. So the 40 times gives you the 30 equivalent units. So I sum them up, the 160, 120, and 150 accordingly. All right.